Hello, what up my people? Welcome back to my channel once again. Today I'm going to be sharing my trade recap on gold. Being 19th Wednesday 2020 February 2025, I'm going to be sharing my trade recap on gold and my sniper entry, and together with my confirmations, I'm going to be explaining my confirmations before I actually enter that trade. So join me on my screen so that I can show you those sniper entry. Join me. So welcome back to my screen, guys. So this is gold on the 5 minutes time frame, and I said I was going to explain why I actually entered this particular trade. So I will be starting from morning, where this particular order block starts, and I will also be starting from my rules of entering a particular trade. So on the first instance, the first thing I would surely want to look at is to look at if we have a break of structure that would surely create an order block and also an inducement for us. Irrespective, the first place I would look at is to look at the first breakout that this particular market break out of this level. So I'm going to use my line here to draw my, either some people call it market structure shift, some people call it change of character, some would also call it anything they want, but this is my breakout here. I'll call it MSS, market structure shift. If we have a market structure shift here, irrespective, what are we expecting? If we have a market structure shift, we are supposed to have an order block and an imbalance. If we look at, we have an order block and an imbalance also. This is our order block because this is the order block that is closest to liquidity. The order block closest to liquidity. And if you look at when was this candle created, this candle was created Wednesday 19th February 2025, and it was created around 11:30 a.m. So if you look at, I knew that this is my extreme order block, and as the market was coming, it also created another decisional order block for me. Another decisional order block, irrespective, I saw the market coming for this particular liquidity run here. It's coming for this liquidity. So irrespective, I have two rules for choosing my order blocks. If I'm choosing order blocks, I have two rules. There is decisional order block and there is extreme order block. I have the two here. I have both decisional order block and I have extreme order block. But I prefer trading extreme order block. But for this particular trade, I choose decisional order block for a reason, because the market execution that happened in my decisional order block is way heavier than the one in my extreme order block. Now, if you look at the candle on decisional order block, it's bigger than the candle of extreme order block. You will notice that the body candle is bigger than the one for the extreme order block. So I choose my decisional order block as my point of entry because I knew that the market could actually, my decisional order block could actually hold this particular market. So I went for my decisional order block. So I drew this one as my point of interest. Now I have my rules to enter my trade. Liquidity sweep inside my point of interest or outside my point of interest. So the first instant when the market came, it tapped into my point of interest first. The moment it tapped into the point of interest, I didn't enter the market immediately. I waited for the market to actually retrace back to the 50% here. If you notice here, this retracement gets to 50%. The moment I knew that the retracement completed, because when your retracement did not complete up to your 0.5 level, that means that particular order block might not hold the market. So let's draw our Fibonacci retracement tool. Let's confirm this. If it gets to our 0.5 level, can you see? It got to our 0.5 level. The moment it got to that 0.5 level, I knew that yes, this particular decisional order block is going to hold my market. So what is the next thing I'm waiting for? I'm waiting for a liquidity sweep inside my point of interest. And irrespective, we got the liquidity sweep inside my point of interest and I entered the market. And irrespective, I actually rallied the market from this particular zone here to this zone here when I got out of the market. So after I actually exited the first trade, I knew that we had an order block here. We had an hammer order block and we also have an imbalance here. Can you see? We have an imbalance here. This is our imbalance.
and this is also our order block. This is also our order block. I knew that the market was going to retrace back into this zone. Let me remove this, my FVG here. This is what I want to get out of here. I knew that my market was going to come into this particular order block and also rally the market to clear out this liquidity. Where is my target? My target is the liquidity. Liquidity here. This is my target. And long behold, the market came, tapped into that liquidity, and still retraced back into the order block that it left, into our main entry. So I rallied this particular second entry from this particular zone, from here to this particular zone here. So that is how I actually caught these 2 consecutive trades on gold. Now let's go to our execution so that we can see how we executed that market. Can you see here? I rallied the market from this zone here, from this particular zone to this place, and the second trade too, I rallied it from this particular zone to this zone. So thanks for watching my trade recap, and I'm gonna see you on the next one. Peace out.